Hey everybody, welcome back to KF Trades. Just doing a follow-up video on a few stocks and a new one. So hope you enjoy it. Hope you can use some of this information. So let's get out there and make some money. Okay, I'm going to talk about a few of the stocks that I've mentioned in the previous videos and do a little follow-up. This first one I haven't talked about, but it's one that I own, and I'm going to explain what I'm doing with it. This is the Carlyle Group. This is a 3-year chart. Right here is their pre-pandemic high, $34.98. And when I shrink this up, you'll be able to see a little bit better. And then this is their high just coming out of the pandemic. Their first high before it pulled back. So let's zoom back in on this one, and I'll explain what I'm doing. So now we're back to a 3-month here. Actually, let's go out to 6 months. So 6-month chart. Their all-time high here recently was $60. Their fourth quarter earnings, they crushed it. They beat with $903 million versus $237 million year over year. And their earnings beat was $2 versus $1.21 year over year. So they absolutely crushed their earnings in fourth quarter. And I think I might have put it in the wrong one, but I believe it was right here that management paid themselves well. Their fees were up substantially. And then ever since then, things have been in a downtrend here. So then they had Q1 earnings and they missed 74 cents versus the 98 cent estimate, but it rose from the previous year of 58 cents. So the estimates were just high. Same thing with revenue. They missed it 779.5 mil versus 978 mil estimate. So after that happened right here in April, end of April. And I think I got in. I own this stock. I bought it somewhere in here. Hoping that this, I was hoping that this 41.65 area was going to hold. I got in a little bit early. So I've been holding it ever since. And then a couple of other items that I keep track of when they have something that they acquired. They just acquired Mantech. That's a defense company that for $4.2 billion in cash. But as the notes there, it should raise their growth prospects. So let's get into the technicals here and explain why I did this. So I own it right up here, around 43. And once it gets $10 below that, so my rule of thumb is once we get a substantial pullback, I'll try to add to it and buy it down. And it's up against my resistance here. So 34.98 was a pre-pandemic high. And then this is the high that's coming out of that pandemic. So it's right between both of those. So I sold the put right here on this day, and it expired today. So I only had to hold it for 4 or 5 days. Got good premium for it because we had a big down day. I think I sold that for, $230. So $2.30 I sold one for. So then it bounced back up, and then today it closed below that strike price, so that will get assigned to me, and it will help me lower my price. So basically you're just cost averaging, but I'm doing it with puts. So now my average price should be around $38, which gets me well below a couple of the major moving averages. So right there's the 100, there's the 200. Right here's the 50-day. I'll have it below the 50-day right now. So on any type of bounce that we get, say we get a bounce up into here somewhere to the high 30s, I can either decide to sell it and do it all over again, or just as it moves up, sell calls against it. So say it gets to $38 and I could sell a $45 call if they're going for something decent. So let me bring this in here for a second and I'll show you what I mean. So if this is Carlyle Group, expiration for next month. And this would expire just before their next earnings. So right here, $30 is in the money, and those are going for $3. $3.10 to $3.50. So just on that premise, if this happens to move up to roughly, say, $35 or $40, say it moves up to $40 before their earnings or here in the next couple of weeks, I could sell a call probably out to 45 that would probably be worth a couple $100. So basically just doing a covered call on it. And since this option will expire before their earnings, this option would expire on July 15th and their earnings are on July 27th. So the ideal situation would be to have this run up towards $40, say, sell a 45 call against it, and then have it pull back before earnings. So I made the premium on that, those calls I sold, and then after earnings, it takes off. That would be the perfect scenario. Okay, this is a follow-up on my previous video regarding Camping World Holdings. When I did that video, it was ranging right in through here, I believe, right up against $25, and that was holding pretty good. Now it's broke through that and went right to where I said it would, right around $23. And it ended up closing right around there. Went down to $22.50, bounced, and held right there. Ideally, we hope this holds. If we go out, this is that resistance where it bounced off right here. And it had a little bit of resistance right in through here. If it does break that, we could see $17. I hope it doesn't. Because as of right now, it's trading at 4 times earnings. That is cheap. Really cheap. 11.3 dividend yield. That's pretty good, guys. So you may want to start looking at this. Obviously, gas prices and higher interest rates may have some effect on this. That's what we're waiting to see. But I will end up owning this just above the 23 range. Right in here. So that's another one that got assigned to me. And I'll do the same thing with this. If we get a bounce, I'll start selling calls against it out to $30 or something like that, just to generate some extra income. Okay, this is the follow-up on SL Green Realty that I talked about in one of my videos regarding dividend stocks. If you haven't seen that, I'll link that up above. And right here, this is just a rough estimate, 45, 55 area. There's a little bit of resistance through the pandemic when it was chopping around right here. We may see 45 area if we get a little further pullback, but I'm fine with that. I ended up getting this stock already. So if we happen to bounce off of this area anywhere, because there's a little bit of resistance right through here, at that 48 area. So that might prove to be good for a little bit. We may get a bounce out of this. This may be our low right here. This one, like I said earlier, was very oversold. Very oversold. And they are trading cheap. 7 times earnings. So with a monthly dividend and a lot of room to run to the upside, still waiting probably for some price adjustments. They're starting to creep out here the last week or two. And I'm sure we'll get more as we head into earnings. People will start adjusting things. But I think this area right in here, down to 45, should be good. Okay, here's my follow-up to the Target video. If you didn't see that one, I'll link it up above, but I'll cover most of it here again right now. Real quickly. So remember, this resistance right here was the top, and then it gapped up. And I said in the last video, we were going to come back and probably cover that gap. Well, guess what? Big surprise. It happened. Today, it actually touched that gap fill. So over the last 3 days, this filled that gap. Touched it right here. So if we start to get a bounce out of Target, it should happen. Unless we come in next week. Who knows what's going to happen over the weekend, but we should start to see a bounce in this one relatively soon, if not right now.